Ryan Edner with your Tuesday, February 27th morning wake-up call. The first question in everyone's mind probably this morning was yesterday's small recovery in grains fund short covering? Given that we had very little other news to go off of, that will be most people's first assumption. So let's look at the data we have so far and take our best guess at this. The open interest decline for both corn and beans was quite large. For corn, the open interest decline was 57,000. For beans, the open interest decline was 22,000. Those are both very large numbers. And the first impression would be that, yes, on numbers that see that large of a drop would imply fund short covering. However, we did have option expiration on Friday, so we need to factor that in as well. Various cash liquidation out in the open cash market here. So again, like we've said before, we will not be able to determine if it was fund short covering from any one single day. We will need to see 2 or 3 days of an open interest decline to be sure. So while those numbers are large and they do stand out significantly, we could still only give yesterday being fund short covering a maybe. That is honestly the best we can give it right now. We just simply don't have enough information to say anything more than that. Otherwise, on the fundamental side, our news is lacking still. Last week for corn, ethanol was strong, but exports were a little disappointing. Over on the bean side, exports were near 30-year lows last week. So we would say the fundamental side for corn is neutral, and the fundamental side for beans is still a bit negative. Over in wheat, last week's exports were a little bit poor at 280,000 tons, but that is one poor week after a previous 5 weeks before that, coming in fairly strong. So a setback, but nothing we would say is overly negative for wheat. We'll call base fundamentals for wheat basically neutral as well. With neutral fundamentals, we do want to keep an open eye on overseas wheat trade. Over the last 4 to 5 days, that has been sideways and choppy, but definitely something we will want to check most mornings to see if that offers any spillover influence to U.S. wheat. Over in the cattle, we're looking at a 11,000 higher show list this week, but we are also looking at box beef, which is continuing to grind higher. So initial impressions yesterday from those two facts, also a bit neutral. We might guess a little bit lower cash trade from the show list, but with box beef still moving up, keeping gross packer profits around $5. This year, $5 will be considered a moderate level. And if box beef can continue the grind higher, even with the higher show list, we may come away with a steady cash trade. So we will consider base fundamentals in cattle also neutral. What we do have to factor in with cattle is that futures are pricing in a level about $3 over cash. So fundamentals are neutral. Futures are a little bit on the optimistic side. Might see a generally calm trade day today on Tuesday because it's unlikely we'll see many cash bids. So futures may also trade calm until seeing first cash bids, which are more likely tomorrow. If anyone has any questions on what they've heard here, you can give me a call directly at 815-578-6159, or just visit us on the web, visit us on AllendaleHub.com, and also keep listening to the Commodity Cast we post each morning.